Hello, welcome. This is the first and the only magazine show with the latest news and information from the UK energy scene. Oil or diesel, wind or solar, it's all here in the next 30 minutes. Welcome then to the UK Energy Show. This week, the aftermath of Storm Amy. What are the consequences for your energy bills at home or at your place of work? Ukraine is claiming more success in destroying or damaging Russia's fuel resources, with strikes at major oil refineries and storage depots thousands of kilometres from the Ukraine border. But what will this all mean for global energy prices? And Ed Miliband tells a UK energy conference of sector delegates they represent hope, as he insists he's going to stick to his plans for clean energy by 2030. Well, joining me to discuss this week's events are Greg Newman, the chief exec of Onyx Capital Group, and Julian Keats, who is a senior consultant with Flux. Gentlemen, welcome as ever. Let's start with the politicians, shall we? And let's play you some clips from this conference that took place yesterday. We'll hear in a moment from both the Eds, both Ed Miliband and Ed Davey. But first, here's Claire Coutinho explaining why the Tories have had a swerve in their plans.
So when people argue that we need to get off the volatility of fossil fuels, the thing that I would say, when you talk to any consumer, is that no one in their right mind would sign up to a 20-year fixed rate mortgage at 10% if there is a 4% variable on offer. So if it is the case that you think it's worth paying a premium for a fixed price, then you should be honest about what that premium is, and you should make that case to the public.
Energy bills are too high, and they've been too high for too long. The typical family is having to pay £60 a month more than they were 5 years ago, and British businesses still face some of the highest electricity prices in the OECD. Now, while that's a statement that has rare cross-party support, the answer to the question, how do you do it, certainly has no consensus.
There are two roads opening up for Britain, and we need to be candid about that, in a way that hasn't been true for 2 decades. One road is a sprint to clean power, a partnership between industry and government, which I've talked about. The other road is doubling down on our exposure to fossil fuels, and I believe, I submit, turning our back not just on the progress in clean energy of the last 15 months, but actually on the partnership of government and business over at least 2 decades in the UK. So I think this country wants hope, and this country wants optimism.
Claire Coutinho, Ed Davey and Ed Miliband there speaking at a conference in London during the last week. Interesting, Greg, that there had been a sort of unanimity of purpose across the spectrum in UK politics. There isn't any more. Is that significant, do you think?
It's hugely significant because there is an acknowledgement, I guess, that net zero and its costs and its general direction for the economy is potentially not as clear as it was before. And now there's a bit of a dichotomy in arguments because it's easier now that the kind of pressure, I guess, if you like, or the peak pressure on needing to be net zero has kind of diminished a little bit, right? So therefore, it's quite easy to bring in this other argument, which is saying, more oil and gas licenses, more of the stuff that's in the ground that we can get more immediately will give us more money and more jobs, and that's starting to be a little bit more compelling, which you probably couldn't have said even a year ago. And then now it's hard for the voter and the general UK public because for the first time, as you say, there's now actually a choice to be made about which direction we go in.
No big decision, of course, in an election for another 4 years. Yeah. But Julian, there are some decisions for this government right in the next couple of months, aren't there, about more electricity generation in the North Sea, and in the North Sea, whether or not more oil exploration is actually licensed. And they're coming down the pipe, before the end of the year?
Yeah, you're absolutely right. And, it's a really interesting one. It's local. Do we expand that production here? It would contravene our current legislation completely. So from a legislative legal point of view, it's a no. It really doesn't sort of sit well with this net zero process. And I think, as everyone in this room and anyone listening to this in the UK is going to be acutely aware that power prices, when I've got my kettle on, when I've got my TV on, probably it's a bigger TV than I used to have. So I'm probably consuming more than I used to. And bills are driven by the price and the consumption. But actually, if we wind back 20 years ago, we had a price for electricity that was broadly in line with Europe. The key issue why prices are much higher now is actually underinvestment in our grid over those 20 years. And the other factor is that's really important, and I find it interesting that Ed Daly's comments I really, really agree with, lacked a bit of substance. And Ed Miliband's comments, hope, I don't think it's about hope. I think it's about gas is driven prices much higher. So during the initial Ukraine crisis in 2022, prices went up 20-fold during that period, right? And it was capped. Government Liz Truss stepped in and capped prices beyond the energy tariff. And the real argument is, and Ed is right, both Eds are right, solar now, recently, I think Ed mentioned that he's approved the Tilbridge solar and battery plant.
Yeah. Another controversial development, we have to say, don't we? But he's given it the go.
Absolutely. Controversial from the locals, understandably, aren't necessarily that happy about it. I get it. If it's in my backyard, I'm not sure. That's totally understandable. But from a greater, wider perspective, if we have solar with battery, so the sun's out midday, I'm storing the battery, I release it when peak prices kick in. And what we need to understand, really what drives the price in the United Kingdom is that the system marginal price, the last megawatt that is needed to balance the system. And that invariably is gas. So gas sets the price. Yeah. That Tilbridge, not Tilbury, that's a port in Thames. The Tilbridge solar plant was approved in 2012. It has a cost of 5p a kilowatt hour. Right. Okay, that is cheaper than anything that we have today that you consume. Even if I'm on a floating variable tariff, it's very cheap. So the tariff prices are 26p. Of course, we're talking that 5p per kilowatt hour is before it's transmitted and distributed.
And the transmission is a story in itself we'll get into one day.
Absolutely.
But it's suffice to say, I think, that we don't have the cabling we need, all the cabling we need to get this new, freshly generated, renewable energy into the grid.
Yes.
In an effective way.
Yeah, and that's why I guess the narrative of whilst we need the oil and gas, which we evidently do, right? So 70% of the time we price with gas prices, right?
Yeah, even 98%, right?
Something between that. But the point is that we import 60% of our gas, we import about 50% of our oil, and that's to do a bit more with the fact that we can't refine very much, so we need to import high value products. But it's also quite clear from the evidence that we're not slowing down in oil consumption in the world and in here. And in the UK. So the argument that whilst this is going on, and whilst gas is so important in particular, but also oil, shouldn't underestimate that, then you might as well be making it locally. And that's where the oil and gas licenses, that's obviously where Claire's coming from. It's an easy win, right? You get the immediate tax receipts, or at least protect the tax receipts that we have right now. You get to potentially start to compete more with Norway, who are finding new oil all the time. Very recently found even a new huge pot of oil, if you like, in gas, and they're doing very well with it. So I think it's resonating with people more and more. So it's definitely the most polarized I've seen. Bring it back to your original question. It's the most polarized we've seen.
It's one we have to watch, because Ed Miliband, even though he articulates an argument against it, may well be signing off on more North Sea oil exploration.
That's also long. Yeah, and I think we need to say these are all political statements. Obviously, there's no one's hiding that. But we're trying to break down exactly what it means. And again, hope, aspiration is probably, in my opinion, the right way to word it, because it is hope, and that needs to be aspiration to achieve these goals. But another way of saying that is we need to invest, and the UK public needs to invest in that, and they have been investing in that. And there's real taxes that you pay to accommodate for these net zero investments, but there's also taxes in the form of the price. And again, it's something we should do. later on, which is break down the bill and exactly where the net zero components and renewable components are hitting your bill, because you're paying there as well.
Because you've got to try and win that argument as well, the pocketbook argument, isn't it, of how much cash we've got left.
Yeah.
We'll come back to some more detail in a second. Let's just talk Storm Amy for a minute. It wasn't that bad, but it had some record. I think the number of sites, according to the Met Office website, had the strongest winds for October in 30 years or more. Any consequences that you've seen from the Flux team?
Just generally, I'd say storms weather incredibly important to our energy prices and people's wallets. Right? At the end of the day, we have a globally integrated oil market and gas market. Obviously, renewables with wind are a lot more about localized events, but particularly in the US, when there's big storms and there's big hurricanes, of which we're pretty much just out of the peak hurricane season, it's always a bit of a nervy time, because we've seen a lot in history. Hurricanes hit the Gulf Coast of the US and destroy refineries there, and that, or at least take them out of operation for a while. And we rely a lot on imports from US. And so when they go down, even temporarily, there's big price spikes. That didn't happen this year. Okay. And that's obviously a good thing for people's wallets and for the global economy, but it's always a little bit nervy. So then when you get the weather systems, as they tend to do, pass from the US over to the UK, things like this storm, it doesn't have as much of an impact on the global prices, but then it starts to get a bit more local. And particularly, colder weather that's coming in, that can have impacts on the prices on gas and electricity. But I guess in the context of this, it's about the wind, right? So clearly the storm is going to go a lot of wind. So you would think a lot of wind turbines, wind farms, it's exactly what it needs, right? It gets powered by wind. And actually a big theme, more first half of the year, but certainly last year as well, was the Dunkelflaut, if I'm saying that right? This German word they use for basically no wind.
Okay.
And it was unusual. It's incredibly, it doesn't often happen that you just have such sustained periods with no wind, but it means you can't produce electricity. And so then you have to go and get the electricity by turbines using natural gas. And so, and the prices and all that. So this time round, it's probably better for you, Julian, to comment on this part, but as in, it did have a bearish impact on electricity prices.
Absolutely. I mean, from as you say, quite rightly say, Greg, this is about the impact for business and households, right? So actually, during Saturday, it was actually a sunny day. So we had a lot of solar and we had a lot of wind, right? And yes, there are grid constraints and there's balancing costs. So how you move that effectively through the grid is tricky at the moment, right? Back to that, we haven't upgraded the grid quickly enough for the last 20 years. But actually prices went negative, and they went negative to minus 42p a kilowatt hour on the wholesale.
What does that mean?
So what does that mean? The tariff, if you're buying power at your house at the moment...
It's probably easier to say electricity, isn't it?
Electricity, sorry. It's electricity, yes, I love to say power. Electricity costs are currently capped. The unit rate is capped at about 26 pence, positive 26 pence a kilowatt hour at the moment. So during that
negative.
Saturday...
They pay me some money, do they?
If you're consuming, you're putting your kettle on, effectively, you would be paid to put it on. But it's at the wholesale distribution level. It's not at the retail bill.
Individual
so you've got to move that electricity from the grid, transmit it across the grid, distribute it to your house, and have the other levies that come across, the green levies and various other levies and taxes and so on and so on. So ultimately, if you're on a variable price tariff like Octopus Agile, Octopus Go, Good Energy have got a variable tariff. There are a couple of variable tariffs out there. Unfortunately, in this country, most people tend to fix their prices, quite sensibly so. Yeah. Because if we had the seasonal chart of electricity prices on the screen here now, for the last 5 years, we'd see right now actually where prices are is a good time to think about controlling it relatively. So where we are on this chart at the moment is right on that right-hand side, bottom side of the chart. This is an annual chart. Yeah. And you can see this is actually wholesale, not retail prices, but wholesale, and it's in pounds per megawatt hour. Okay, so this is energy cost at the wholesale distribution level, and assuming I'm consuming the same amount throughout the day, from midday to midnight, right? All through the day, from midnight to midnight, I should say. And we can see here those big peaks represent 55 pence a kilowatt hour, just as the wholesale price. Then add on all the other different things at about 16p additional. What I wanted to just point out there is that Tilbridge plant plots below the lowest point in terms of cost on the wholesale grid as a CFD. So it's really very positive from that point of view. What's driving those prices is 98% of the time, the gas price, because it's that last marginal piece that needs
I think
to
just staying on the negative prices, because the first thing I would think is, well, how do I get those cheap prices?
Yes.
Yeah.
Can I sign up? Where do I sign up?
Good question.
I think this is about the mechanism as we pass from wholesale prices to retail, and it's the same. It's the same with oil. It's just a very different setup. And you've got to therefore track the wholesale prices. Again, something we want to do and show and be very visible about where things are and where they're going, we think, and all that. But when it gets to the retail level, you're obviously getting into that distribution economics. There's duties to be paid. There's, as we said, these levies,
CFDs, balancing.
that kind of thing. And in short, essentially, like you said, Julian, if you're on a variable rate for electricity, in theory, you can benefit more.
Yes.
But there is a minimum, right? They will never, well, at the moment, it doesn't look like they will ever say, okay, we're going to pay you. I have heard of scenarios with Octopus where they will say,
Yes, Octopus do this.
From 10 to 11 on a Sunday, we'll pay you a small amount of money to do it.
Actually, that's a really good point, because actually Octopus have been very, Greg Jackson's really led that company forward. They have a system called Kraken. It's this massive AI system. It's doing 3,000 processes a second of data points right across the country of all the generation, and saying, tomorrow I'm going to predict that actually if you're in London between 11 and 12, given the weather, given the wind and all the generation mix we've got, you can consume power for free.
But let's be honest, they are still buying it wholesale very cheap and giving you maybe a slight, they're still making money out of that, right? And that's their infrastructure and that's their trading infrastructure.
It's a great phenomenon though, isn't it?
Yeah.
The idea of power free. We'd
Can you
love to get
imagine,
into that.
wind back 20 years ago, British Gas contacting you saying tomorrow you can have free. Right, no.
I want to get onto the Ukraine story only because it's happened this week. And look, we all know about the difficulties of reporting on the Ukraine-Russia conflict. And it's, I think, on a very physical level, we all know it's grinding on at the front. It's an interesting take, I think, and a lot of observers have spotted that in September, Ukrainians being very good at letting us know and publicising what they're achieving. But I think even if you take that on board, it does appear they're having more success in getting drones to go and blow up or damage both refineries and storage depots, which in and of itself is interesting from the war. But Greg, I wonder if Russia's oil supplies and therefore reserves of diesel are dwindling, will that have an effect on you and me here in the UK?
Absolutely. When it comes to oil, so again, if we talk about our renewable capacity being quite strong to produce electricity and all the rest of it, when it comes to oil and gas, it's absolutely not the case, right? Oil in particular is incredibly integrated. So in other words, let's say we produce a lot more North Sea oil. That doesn't mean UK prices get cheaper. That just goes into this big pool of oil. And your concern as a consumer, if you're concerned about price volatility or price increases, is about how much of that big pool of oil that's available in the world is available or going down. And ultimately, by striking Russia and having fights with Russia, if you like, and targeting on the energy side, you are running the risk that you are diminishing global supplies, which ultimately raises global prices, which will find its way obviously to your wallet.
So if we want to support, let's say we want to support Ukraine and think, good on you, you're actually harming the aggressor, but actually there will be consequences of that actually our energy, for another reason, could start climbing again.
I think, and the big thing on that is about refineries. So we like to talk about oil and gas like they're just these binary things, right? Oil is ultimately, when we talk about oil, we really talk about crude. It's what you dig up from the ground. But what we use every day is thousands and thousands of different oil products, and they've got to be refined to process everything from plastics, fertilizers, diesel, of course, airline fuel, all that kind of stuff. The problem we have is we're not just short on oil locally, crude oil, we're short on the ability to process it. Our refiners have gone down from 17 or 18 50 years ago to now about 4 operational. So we have to import half of our oil, of which the majority of those imports are diesel and jet fuel. We can produce enough gasoline and we actually export that, and we export shipping fuel. We don't need that either. But the point is that refineries in Russia, there's about 7 million barrels, I want to make sure I'm right there, but 7 million barrels of refinery capacity, I believe, in Russia, which again, you can say it's Russia's problem, but no, but they're set up to refine the crude, to create the products for the world, to then send into the world, into the export markets, which obviously finds its way back to the UK and Europe. So when you destroy these refineries, you are hurting yourself ultimately. That might be a completely willing thing to do, but it's just something people need to be aware of. If we could produce our own diesel, we would, and we can't. it's not economical for us to do so. We have to import it. We pay the price. And when we sanction Russia and when we hurt their energy infrastructure, we have to buy it from someone. And it's all integrated. It's not to make a biased opinion one way or the other. It's just knowing that it is
These
integrated.
things are all joined up. That's the point, isn't it? And if Russia has got a fewer working refineries, and I think with all the reports, one has to assume that it's still a modest amount of damage. We're not talking, in the 10 or 20%. We don't actually know, do we?
We don't know.
You guys are plugged into what's happening in the world. What are you hearing from your sources?
Well, this is the thing. We're absolutely plugged in because as traders, as a trading company, ultimately at the group level, this is something that affects the gyrations of the market like all the day, all day, every day. And so you really do need to know. And of course, there's the opinion, like you said, about what the Ukrainians are saying, what the Russians are saying. We're trying to find the truth, if you like, or what at least is confirmed. And it's very variable. We've heard lots of different reports. Some say up to 35% of the refinery capacity has been taken offline.
Okay, that much.
And some are saying there's been no impact to gasoline supplies, at least in Moscow. No one's queuing up, that kind of thing. But then the other areas of the country, they're having to travel 50 miles to get gasoline. Yeah. It's definitely not clear, but you are seeing videos and evidence of the refineries. They are being hit. How much capacity, we just don't know. The more strong confirmed signals is how the traders are operating. And this is the physical traders. So the physical guys that are moving the oil around about, they are not allowed to basically resell diesel and gasoline in the open market. So what's happening is only the producers, the people who actually produce it themselves, are allowed to export. That's quite a clear signal that Russia are concerned about what they've got and actually should they use it domestically first. Right. And there's actually bans on exporting some of their stuff. So that's as clear as a indication as you can get. Having said that, the global pool, as big as it is and what's going on right now, and on the backdrop of what we think is a global oversupply, it hasn't really had that material of an impact. And actually a lot of traders lost a lot of money thinking that it would. Okay. So it's very variable.
Yeah, we have to be patient to interpret the headline. So tell me, if they are short of refining capacity though, who's still friends with Russia who might take some crude and turn it into all that myriad of products that we all know, like the diesel, like petrol and all the other plastics and so on?
Yeah, I think that's the point really why it has had lesser impact. That crude has now, because those refineries are unable to, the Ukrainians have been very targeted on those refineries, focusing on the middle distillate area of the barrel, because they know if there's no diesel or gasoline available on that that western front, then it's much more difficult for Russia to fight a war, right? So this is why they've been so targeted. That market, as Greg was just saying, is about 30 million barrels a day globally. The impact in terms of exports, because let's remind ourselves, there are sanctions on buying Russian exports from most countries.
They're being busted,
right? So actually, it's only around about 160,000 barrels a day on the grand schemes of things, versus 30 million barrels a day of that stuff flowing around. Hence why Greg was saying it's had little impact. But back to your point, where those, and I think those targeted issues, the refinery isn't completely obliterated. It's just a unit. But it's very difficult for Russia to now mend that quickly, and it's in so many different places. So the numbers ebb and flowing. No one really knows, as we just discussed. So the crude that was going there, that's surplus, if you shut in a crude field, it can take a long time to get it back online. It's not like a tap in your house. Okay. So if you shut it in, it can really start glooping up and sticking. So basically, the Russians want to produce that and get some revenue to feed the war machine, right? So that crude probably, I don't know, guess India and China, I don't know where that flow's going, but those would be my guess.
Well, we do know. I mean, it's a majority India for some time, and then China, others, and there's pipelines on the Eastern Siberian Pacific Ocean that they maximize. It's a very short journey to get it to China, and they maximize that outlet. But I guess the other final thing on this is that, again, about this global integrated side of things, that oil finds its way to China and India, majority, but other places as well. It's about the refining and sending that back. So it's actually China who we hear about 50 to 55% of their refinery capacity is in use right now. It's not very high, is it? So they've been stopped. They got a bit spare, and their actually inventories are the highest they've ever had. So it's what's called a strategic petroleum reserve. They are building up huge, 1 billion plus barrels of capacity for any number of reasons. We don't know. We're not We don't know at the government level what they're thinking, but of course, generally there's a security of supply thing going on there. It could be about it being very cheap versus gold prices. It could be a long-term geopolitical play. We don't know. But the point is they're not taking that excess oil, refining it, and then sending that into the world, which they have done in the past, or not as much. They're not doing it as much as they've done in the past. So if they were to, the net impact would be practically zero. And if you like, if that's what you were trying to achieve, lower prices, but maximum impact on Russia, that would be the best way.
I think the key thing here that we're really trying to underline again, and I think Greg mentioned it, is in terms of UK diesel price, it's had very little impact. And gasoline prices, in fact, they've slightly weakened. You know, if you're looking on Flux markets earlier, they've actually, well, they've been relatively stable. Actually, within that price, the thing that's really moved, that's off the radar, as prices have generally trended lower this year, is actually the bio element that gets fed into to green the diesel network and green the gasoline network. So this is ethanol and gasoline and biofuels that get blended.
That's a whole other topic as well.
That's a whole other topic. That actually is increased in costs.
Yeah.
But it's off the radar because you don't see it at the pump.
So let's now consider what's been talked about on social media vis-a-vis the energy world. We call it What's the Buzz? And we're going to start, first of all, with this comment from Jimmy Jones, posted last month. Julian and Greg, have a look at this one. Octopus Energy getting another mention. Julian.
Yeah, and he's saying, is it worth sticking with a variable flexible tariff? And I think the answer to this, the first thing really is, you know, we talked about the energy prices in this country being dependent on the gas price, setting that the last bit here. So if you're worried about that right now, energy prices have a risk that they could spike up. Geopolitical issues globally impact our costs here in this country, household level, business level. So if you're worried about that, you want to budget, then fix or cap your costs. But in terms of a variable tariff, it's really lifestyle dependent. The first thing here is you should always shop around for the best tariff that suits your lifestyle. The next thing is once you're on that, if you are on a flexible tariff, you want to go for one where you've got a very cheap overnight tariff. So you can fill up your car, your EV, and set your washing machine on. Now, there's a bit of time resource there, but that's not a costly thing to do. So you set all your heavy load, like your washing machine, your tumble dryer, to work at night when you've got the cheapest prices, or whenever that is on the variable tariff that you've got. So that's the benefits of variable tariffs. You can pick and choose because you've got your smart meter, you know what your prices are, and you'll know what your tariff is. It's normally kind of crystallised, you've got cheap prices.
So if you want to be proactive, variable, and I think variable as well as leaving yourself exposed to the wholesale price, which we keep talking about, which means if that goes up and down, that's where your exposure is. I think, you know, anyone can talk about both sides, give an opinion on this. I would honestly say that it looks like with the wind that we're getting, which has picked up a lot in the past, with storage being quite okay, if you like. In Europe, we're about 80% storage. From the gas side, I think it's not a disaster situation. We are in a lot different scenarios we were even last year and certainly the year before. We've got a hell of a lot of liquid natural gas supply, which is, you know, the form that you can ship rather than send through pipelines. And there was an enormous response to the Russian pipelines being cut off to Europe and then therefore the UK to some extent. So, you know, the US, Qatar, but certainly the US have not only sent a lot of liquid natural gas our way, they've also been producing a hell of a lot and producing a lot of export terminals. We're producing import terminals. There is so much security in liquid natural gas supply. So you shouldn't expect a big shock, in my opinion. Having said that, it is still expensive because it has to get here, and you know it's always better to buy the most local and more freely available. But you're talking about incremental gains. I think that would be my opinion, not to make too much of a market call, but
yeah, I think you're right.
Public sentiment also, a bit of anger really, when you compare yourself to our near neighbours. Now, France is one example, but let's show this particular tweet we've got here. Britain paying our highest electricity prices in the world for second year running. That's the essence of this particular, or the tweeter, a chap called James Melville, has taken that article and is saying we are being fleeced. We've covered a little bit of why that might be the case, but is the anger understandable, Greg?
for me, it's certainly understandable if you didn't know what was going on.
Yeah.
At the end of the day, the investments, and there's very simplistic, overly simplistic talk about it's to do with this, it's to do with Russia, Ukraine, or it's to do with renewables.
Well,
It's
we're
kind
here
of-
to try and explain
we're
that.
trying
So
to
help
trying to
us
break it down.
understand.
So there was an enormous wholesale impact in prices because of what's going on in the world, but that's since really calmed down. Like I said about the response and physical supply coming, that's all largely sorted itself out. We've got lower crude oil prices. The world is looking in a lot better shape from the perspective of supply, and that is ultimately a good thing, and ultimately that should mean prices are going down. So why aren't they? Well, there's taxes and duties, and we are paying quite a lot of money to subsidize wind farms. It's a big topic, and Julian can help me with it maybe another time. But just in brief, we do also have to pay for the intermittency, which is another thing that politicians are starting to emphasize a lot. We talked about wind creating electricity through wind farms, but also when they don't work, then you have to go and find the natural gas. And the problem is the volatility. It goes from super negative to super expensive, but when it's delivered at the retail level, it kind of results itself, ironically, in just a slightly higher price, because it's basically it's a lot harder to monetize the weakness than it is to pass on the expensive price.
And one of the other things, I think we touched on this, Julian, was that isn't it the case that even if the wind farms are working and they're generating gazillions...
Generation, yeah. Electricity.
Let me rephrase that.
I was going to say.
Even if the generators are turning, they're producing a lot of electricity.
Yes.
Sometimes it's not needed. And the system, the network, has to turn them off. And then the generating company gets paid some money for doing nothing.
Yeah.
Or for squirting it all down the plug hole, or whatever you do with electricity you don't need.
Absolutely. And again, that we could focus that's an issue because of renewables. But the way I view it is there are three things in answer to that tweet. First off, it's our dependency on the gas setting the price.
Yeah.
Not gas itself, but setting the price.
Yeah.
Right? And that creates huge spikes in prices we saw in 2022. The next thing is the policy. The guys that set the policy sometimes, and I'm not saying it would be easy and I could do a better job, but that really is very important. And that drives a lot of these issues that are hitting people in the wallet. So getting sensible people to set good policy is really critical here. And the fact that we haven't upgraded our grid for 20 years is what's really driven this issue. Whereas France, Spain, Germany, and most of Europe have invested billions every year. We haven't. And that's
In
the key issue.
in the grid.
Yeah, in the grid, in their grids.
In those bits of cable that actually get electricity from A to B.
Copper wires, that's it, right?
I think the frustration again is, do you know what's really going on? And again, you are being told very different things.
Yeah.
And it's not
It's that detail, isn't it? You need, yeah.
It is that detail,
Yeah.
but I think also the problem we have with these such polarizing views to get people in power and these kind of things, you do get quite extreme policies at the same time. And obviously hindsight's a wonderful thing, but this talk about transitioning is kind of is the easy thing to slate the government for, because if we had been more in a transitionary mindset, we would have stopped some of this fluctuation potentially, right? At least there would have been an attempt to, but we've been very aggressive. And again, it's so easy to blame politicians for this, but it's also, remember, politicians are responding to the general public. There was a lot of hype, which I think peaked in 2021 in particular, about a very aggressive anti-oil and gas narrative, which that's what people decide. But the reaction to it is so extreme. You got to agree that has created a bit of an issue, intermittency issue, and higher prices.
It's certainly created that I worked at the time. I worked in the oil industry, in delivering oil, and there was a mindset change in 2019. It came shortly after Theresa May made that legislative change. The Climate Change Act was 2008, but it was updated to actually ratify its legislation. Come 2050, we would be net zero versus 1990 levels. Yes, that rush to now decarbonise is problematic because we've underinvested in our railways. We've underinvested in so many elements, and really, in this case, in terms of power to the home, our grid.
Okay. We've got some charts, Julian. I wonder if you could just help us with these, with the latest bits of data from the various markets. Of course, we're concerned about oil, we're concerned about diesel prices, petrol prices, and so on and so forth. So what are we seeing? The GB base forward curve. Explain what the hell that is to me.
Yeah, absolutely. So this is the next 6 months to a year out. This is the base load price. What does that mean? It means if I consume power evenly throughout every half hour of the day, this is the cost, wholesale cost of this price. And this is the current future cost of this as of this morning. So we can see during the winter, as you may expect, the lights come on more, demand goes up. So we're seeing an increase in prices here. And this is in pounds per megawatt hour. Okay, so we're seeing prices, I think, go up to around about 80 or 90 there come the winter and drop down. Now, as Greg just said just now, if there's a geopolitical event that impacts gas prices, this whole thing just moves up.
But to go back to the chart, it is showing that actually the way that the market is trading the future, and there is this forward market, right? And this is another thing we're keen to bring visibility on. There is a market that trades the future prices in calendar months, right? Going far as 3 years out sometimes, so you can have a lot of trading. And it's a gauge of where traders are seeing things, right, ultimately. And you can, in theory, fix these prices right now and protect yourself against those prices. That will take some time to filter into the retail audience and then being able to profit from that. And that's something we're really
But that's your meat and drink, right? That's what your team does every day.
Exactly. And that's what we're going to try and bring in an intuitive way to the audience. But sticking on that, I mean, it's suggesting that if you hold steadfast and, on variable or whatever, or just wait for things to happen, it should get better from a consumer price perspective.
Yes.
That is the way the market's trading right now. That's logical in my opinion, and we don't foresee any shocks to that story right now. But as is always, markets are incredibly volatile. Anything can happen. So if you can fix
no crystal ball.
No crystal ball, but it's looking more attractive than it has in years, which is ultimately a pretty good thing.
And what that chart doesn't really underline, because it is that even. Houses don't consume evenly. A data center does. It's always on.
Yes.
Yeah, it's very, it is always consuming very regularly throughout the day.
Yes,
so it's a big baseload consumer. So that's a data center's cost profile for the future, plus distribution and other taxes that I get added onto this.
So the UK household will be
for a
paying
UK household. Each of those days, they've got what we call a profile that peaks at breakfast and peaks again at higher at dinner time, effectively. But during midday, when the sun's out, prices drop massively. During the night, if the wind's out.
So sleep throughout the day and
So this is why it's sort of flexible. That question that chap tweeted was really important, because actually what I just want to add on that is that most people, I don't know whether they said this earlier, most people fix. 10% are on variable tariffs. So most people do fix in this country. So with prices coming down during Storm Amy, they're not benefiting at all.
And that's that point about negative prices again.
Yeah. Right, let's have a look at the natural gas. You've got another graph here, Greg. What are we seeing?
Pretty much the same thing, a slight dip into the future. I actually think this is an example of maybe the trading not reflecting actually what we probably at Onyx, if you like, or at Flux, if you like, that we probably do think prices are going to go lower than this. Again, that's our opinion. That's not absolutely what's going to happen. And that would be an example of, if you were to fix right now, you're not going to benefit from potentially future weaker prices. But again, this is something you've got to decide yourself.
So this is the National Balancing Point, UK's sort of natural gas, very similar cost-based TTF. That's the European equivalent. Okay. And if we converted this into pence per kilowatt hour that people know at their homes, this is about 2.7 pence. You're probably all out there. The cap at the moment is about 6. Okay, maybe 7. I can't remember exactly. So this is substantially below that. The heating. Okay, what's really important about this graph, you can see the broad shape is very similar to the power graph, because this thing sets the other one, right, as we were discussing. And what's really important to think about that, if you were to do your calculations here, is actually you need to double the amount of gas. You need 2 units of energy from gas to produce 1 unit of power. And then you've got to add on your carbon dioxide emissions.
Gotcha. We should do the fuels, because we talked about them a lot in this show. Diesel, let's just consider the diesel graph. And what are we seeing as we look ahead?
So diesel at a wholesale level is what we call a lot more backwardated. Now, again, too much detail to go into right now, but essentially another good example of prices are looking weaker going forward because of essentially the structure of how the market trades. It's about storage, it's about all these kind of things going on. So if you like, that's a bit of an artificial forward price. What the market would expect is those prices later on will catch up to the front, given what's going on right now. Again, if you take the view that that's not going to happen, that's fine. But I would say from a market perspective, those are actually on the low side in the future. And we were a little bit concerned that those prices might increase.
I think if I was a household and I was consuming diesel, typical households 1,500 litres of diesel or gasoline a year, or a small medium business, or even a large business, what I draw from Greg's comments there is near-term prices are expensive, so the pump price is expensive, but the forward price drops. So if you're thinking about budget controlling, bear in mind most households fix their electricity and natural gas heating costs. They leave pump prices completely floating. So actually that's a benefit. That's a saving straight away.
That's what it is.
You can save 5p.
And while we're down in the supermarket, what about petrol? What's the graph showing in petrol?
It's pretty much the same thing, but I think that look, at least the house view, if you like, is a lot more less concerned about the state of the gasoline world, if you like, than the diesel. And just the main reason for that is the diesel is very much what Russia produce and what they focus on, and it's back to that story. That's the real variable concern. Whereas gasoline is more globally produced. We actually produce a lot ourselves in the UK, and it doesn't look very concerning, at least.
That's an optimistic note on which to end this first edition of the UK Energy Show. Thank you very much indeed for watching. We hope you found it useful. Do add the comments below where you're watching this. We'll look forward to reading them. See you next time.